CNBC has come out with a list of what they call smart tax moves to capitalize on before the end of 2021. I'm going to share those with you, comment on them, and more importantly, tell you what I would do before the end of 2021. Hi, I'm Andrew Henderson. This is Nomad Capitalist, where we help 7- and 8-figure entrepreneurs and investors legally go where you're treated best. You can learn more at nomadcapitalist.com. Now, I'm going to tell you, every time I read these smart tax moves for the year, every time I hear about people rushing to make changes to their business or their investment portfolios, I think to myself, I'm glad I have gone where I am treated best, in addition to a better lifestyle, more social opportunities, more personal freedoms. As an ancillary benefit, I'm happy that I no longer have to play these games that people play, which, by the way, in a number of places you're not supposed to play, where, December 29th, you're prepaying all of your bills, paying a bunch of vendors in advance for the next calendar year, pushing as much money out the door. And by the way, I talk to people who do that. And they say, listen, as business grows, it's hard for me to find expenses to get deductions from. It's always a lot better to just say, I'm going to go where I'm treated best, and whether that's 0% tax, 5% tax, whatever it may be. Spending all your time at the end of the year doing inorganic business and investment moves just to reduce your tax bill is something that, I don't think you should have to do. I feel a lot better. When I want to sell a stock, I sell it. When I want to do something with my business or pay an expense, I don't worry about whether I'm going to pay 45% tax this year or next year by doing that. But here's an article from CNBC.com. I will caution you. I'm not a tax professional. I'm not a financial advisor. We work with those folks here at Nomad Capitalist for our clients. But I am not giving you tax advice. I am reading you what CNBC is talking about, and I will pass along what I would do if I were in your shoes. But the article talks about smart tax moves, and it says experts agree that taxes will rise. I was talking about this on Fox Business and elsewhere last year. People were doing stuff before 2021. Now, in the U.S., Joe Biden's tax hike agenda did not make it through. And so the article says, to what extent and when taxes will rise remains unclear, but experts agree taxes will rise, not just in the U.S., but I think all across the Western world. And so they go through things for employees and retirees and investors. I'm going to focus on primarily investors. Because they talk about things like charitable giving. Listen, I'm a big believer in charitable giving. I don't do charitable giving for tax incentive. I do it because I believe in it, and I give it to causes that are valuable. And by the way, there is I think a karmic benefit of doing it that way. Just you feel more peace, and I can tell you that, having cut my ties with the U.S. Estate tax planning, you're going to see exemptions climbing to over $12 million in the U.S. next year. For how long, we don't know. Bunching tax deductions. Lots of advice here about Roth conversions and IRAs and health savings accounts. I got to be honest. Again, very inorganic stuff. Well, let's talk about their suggestions for investors. Number one is recognize capital gains, they say. Take some time to review unrealized capital gains with your wealth manager before year end to capture appreciation in a potentially lower tax year. And one of the things that we've talked about, one of the tax trends that I've talked about, is I believe you'll see more retroactive taxes. We've seen it a number of times recently in the U.S., at the federal level, and also in states like California saying, let's go back 10 years and make people's life miserable. So definitely, even if you were to sell something January 1st of 2022, let's say taxes were increased on April 1st, everything that I've read over the course of the last year since Biden got in office is that it is constitutional to say, hey, this applies to the entire calendar year, tough luck. And so look at recognizing capital gains. That's CNBC's advice. One thing I've talked to people about separately is if you own real estate in the U.S. and you're not planning on staying there, do an analysis on will the taxes go up. I think there were 1 or 2 states that wanted to increase taxes or add new taxes on the sale of property, especially property with a certain amount of equity. The market in the U.S. and many other countries is red hot right now. If you think that's not going to continue, it might be worth taking that money and setting it aside, getting yourself a residence, a citizenship, a home somewhere else, locking that in. Not financial advice, but it's something I would think about. The article on CNBC also talks about tax loss harvesting. talks about holding investments for over a year for the 0, 15, 20% capital gains tax rate. Also talks about opportunity zones and making sure that you get in or you stay in under the right conditions. Again, inorganic. Now, people are going to complain. They're going to say, oh, Andrew, not everybody can move. Not everybody wants to move. Well, listen, if you want to live in the United States, I'm all for, listen, the taxes in the United States are high. They're going to get higher. If you want to live there, you're going to pay them. Now, when you have people in the mainstream media calling the country unrecognizable, this isn't just about tax. In fact, a lot of people who are coming to me these days are more concerned about personal freedom and the lifestyle than they are about saving money. But if you're going to make the move anyway, you might as well take the savings. And so, holding investments for a year, I have guys who are day traders. They're not holding investments for a year. Then, they'd be better off somewhere else. Why do you want to hold a stock or an investment longer than necessary to avoid some tax? Also, I never understood this opportunity zone thing. Now, listen, Robert Kiyosaki, I don't know if he's in opportunity zones, but he's in real estate. He spoke at Nomad Capitalist Live. And he said, listen, I've got a pretty good tax situation, is the way I would paraphrase it, because I invest in real estate. But when I look at an investment, do I want to invest in some decrepit, crumbling part of the country? I wouldn't do that in other countries. In fact, I have solidified my focus on investing in Class A, Tier A investments in capital cities, in big cities, in great areas. When I'm looking to invest, I'm looking for the security of my investment. I'm looking for what can happen to it. Is it diversified? What currency is it in? What kind of yield can I get? What's the appreciation potential? Do I believe the appreciation will stay? What's the potential this asset will drop in value? What's the potential there'll be new restrictions placed on it? Can I rent it out? Can I not rent it out? Do I need a permit? Do I need a license? Will they not grant me a license? Can I do Airbnb? That's what I look at. And so am I going to invest in some crumbling area? Usually, I guess the opportunity zones are in funds. People manage it. I don't really want to do that just to save some tax, because I know if I go where I'm treated best, if I'm an American, that could be moving to Puerto Rico. That could be moving offshore, depending on if you're a business owner, if you're an active investor in some cases. That could be expatriating entirely. But if I go where I'm treated best, I no longer have to worry about tax loss harvesting or how long I hold my investments. Now, for dividends, I may have to worry, but on capital gains, generally not so much. Again, not tax advice. But what I'd be looking at is, if I am an investor, I would be looking at, what are the assets? Do I believe that interest rates going up are going to harm my assets? Maybe I put that somewhere else overseas where I can get a more stable return, perhaps in an emerging economy where they don't have so much volatility. Or, things have just steadily gone up for the last 20 or 30 years. Am I going to put my money in opportunity zones? No, I want to be diversified. If you want to be in opportunity zones, that's great, but those are my ideas. And so this is the typical stuff that you see at the end of 2021. I'm not saying it's bad advice. This is put together by Kelly Haggerty, who is a contributor to CNBC. And again, HSAs and FSAs and maximized retirement contributions. You know how I feel about that. I do not want my money tied up with the government where the politics are that everyone who has money is a criminal. By the way, Elizabeth Warren basically said that. She said, we need to go after rich tax cheats because we basically, and I'm paraphrasing here, she basically said that, if you're rich, good chance you're cheating on your taxes. She literally thinks that the mere fact that you are rich, in a country where anyone can become rich, in a country where during the pandemic, lots of people that I'm talking to started businesses, built businesses, started trading, got into crypto. They're becoming rich. They're all cheating on their taxes. Listen, if you live in the US, you should pay your taxes. I don't support anything else. We do things legally here. And you know what? If people don't want to work with me because they want to cut corners, please, the feeling is mutual. We want to help people do things legally. But there is a plan where you can legally remove yourself from the tax system, not just as a U.S. citizen, but from pretty much anywhere else in the world. And once you do that and you choose your tax rate and you choose a place where you want to live and you choose a place where maybe you feel more at home, you don't have to worry about this stuff anymore. When I left the United States, I first called my tax advisor in like 2006, 2007, and I'm like, should I do this IRA? Should I put $5,000 in and get the tax deduction? And of course, that's the traditional advice. You should do that. But there was something about it that just felt wrong to me. I'm tying up my money. If an opportunity comes up, I'm going to be nimble. It's not a lot of money potentially, but why would I do that? Why would I want to tie my money up? Why would I want to put my money in the largest untaxed pool, unconfiscated pool of wealth in the United States? You've seen other countries in the Western world where they've helped themselves, people's retirement funds. You think it couldn't happen there? You think they might not change the rules on HSAs or that kind of stuff? So a lot of kind of garden variety advice on, taking RMDs as a retiree and all that kind of stuff. My advice is take stock on where you want to live next year. If you were an American, you could still look at a move down to Puerto Rico to dramatically reduce your taxes. For those people who have second citizenship, you could still look at cutting your ties with the U.S. entirely before these taxes come into play. What you could at least do is start to dip your toe in the water. Open a bank account. By the way, don't care if you're in crypto. Don't care if you don't like keeping money in the bank. Have a bank account somewhere, just for the feeling of getting more connected, that this is comfortable. Maybe you buy some gold somewhere and put it there. By the way, some of these things may have reporting requirements, like a bank account. And you should follow those. But maybe you take some money. Maybe you sell some stuff in the U.S. Maybe you take some of these strategies and you put some of the money offshore. Maybe you go and you invest in property somewhere else. Maybe you buy a second home. Maybe you buy a second home that gets you a second citizenship. Put your plan together so that you are nimble. These strategies are not about being nimble. These strategies are about coloring inside the lines. These strategies are about you have no other options, because people in the United States largely don't think anything exists outside the United States. More people than ever are realizing retirees are moving en masse to countries like Ecuador and Mexico and Costa Rica and Portugal. More business owners and investors, the ones that we work with, are coming and they are moving. But most Americans don't think that. They just think, hey, everything else is offshore is scary. My goal for 2022, move more and more and more money into new countries, into new investments. I do have money in the United States. I still do. I still in things in the U.S. We have businesses. I have personal. But I want to move more of it out, because I want to be more diversified. I'm not saying move everything out of the U.S., but you have to ask yourself the tough question. Do I want to continue playing this inorganic game? Or do I want to go where I'm treated best, where I can invest? And maybe my capital gains tax rate can become as low as 0, right? This is not just investors. It could be business owners. You want to sell a business someday, right? If you move to Puerto Rico, if you expatriate, if you do something about this, the moves you make now are going to dictate what the value of those assets are. Whether you're deferring the tax, whether you're paying the tax now, if you're expecting a big increase in your assets, you want to make some moves. You don't want to wait around to the last minute and be thinking, 3 days before the end of the year, what can I sell? It's too late then. People call me too late. They should be calling me years in advance when they've got a business worth $1 million and it's going to $50 million. When they've got cryptocurrency worth, $1 million and it's going to $50 million. That's when you should be getting this done. So you've got to think ahead. That's what I would do. I'm not giving you tax or financial advice, but if I were in your position, I'd be thinking, where am I going to be not just in 2022? What are the tax law changes then? I'm not focused on Congress or Joe Biden. I'm focused on the systemic culture of the country. Where am I going to be the next decade? What moves can I make now to set myself up for the future? That's what I'm doing for 2022. Don't stop now. We've got well over 1,000 more videos here on YouTube for you to watch and learn how to go where you're treated best. And if you want to work with Nomad Capitalist personally, go to nomadcapitalist.com/apply. Learn about our unique, tried and true process, garnered over years of experience, and learn how you can become our client.